giving consumers a financial edge, providing economic tools designed for you to win. With the Empirenomics business guru Al Mills and the credit lady gem dropper herself, Monique Macklin.
Hello, and welcome to Wake Up and Win with Al Mills and Monique Macklin. My name is Monique Macklin, and I'm known in the industry as the Credit Lady.
Hey there, my name is Al Mills, aka the Prophetic Financier, your world's #1 socioeconomic mobility mentor.
Okay. Now, we have created a space that is designed to enlighten, empower, and edify people to their next level of economic success. On this platform, we do that by having conversations that require you to examine your current situation and make changes as needed to get you to the life that you desire to live by thinking better, banking better, and also leveraging better. Now, today's show, the topic we will be discussing is short sale no-nos.
Ooh.
So yeah, we're going to go ahead and jump right into that.
Ooh, that's another hot topic.
Yes.
From 2008. No.
Oh God, Jesus! I remember remember those days with the short sales and the foreclosures. Oh my God!
Absolutely.
So a short sale, in short, is when a homeowner is looking to. They owe the bank more and they're trying to get out of that property. So they're behind on their mortgage. They need to get out of that so that they don't have a foreclosure represented on their credit report. And they have to speak to the bank, right, in order for them to agree to them selling this as a short sale. And it also helps the person who's going to buy the home get in at a good price, right?
That's true. Well, let's look at it for a little more of a ABC definition of a short sale. It means just that short. You are shorting the bank.
Yes.
It means that the bank is going to agree to take less than the accumulated debt that's owed against the property.
Okay. Exactly.
That's actually a short sale.
Mm-hmm. Mm-hmm. So with a short sale, in many instances, a person is pretty much drowning at this point. They need they need some relief. And instead of, they may have missed quite a number of payments, and they'll make a call to their bank and have a conversation with the lender to see if they'll agree to that. So in this market that we're in, coming out of the pandemic, a lot of homeowners did not pay their mortgage, correct?
That is correct. There's a moratorium that was going on nationwide that was allowing some form of a temporary relief to homeowners and or renters where they were not able to pay their mortgages due to displacement, job loss, and the like. Correct. And so now the moratorium's been lifted and the courts are filled with lawsuits, lis pendens, if you will. People are now facing those challenges that those before them in 2008 bubble were facing.
That was a heck of a bubble back in the day. Do you think it is going to get as bad as 2008, or?
Well, according to Realty Track and Zillow and the National Association of Realtors, the numbers in comparison to 2008 are twice the amount. So, yeah, the devastational fallout is going to be twice as hard as it was in 08, 09.
Really?
Yeah.
Oh my goodness. So, go ahead.
Well, as you know, real estate has 4 cycles, right?
Right.
There's the cycle number 1 is the boom.
Right.
Cycle number 2 is when prices kind of flatline and they teeter consistently, which is considered a seller's market.
Where we're at now.
And then there is the bust where prices go down. And then there is the transitional period where
people get rich.
You get rich in the transition.
Right.
You see, wealth doesn't dissipate. It only changes hands.
Exactly.
And so right now we see it is a seller's market where there's not enough inventory to meet the demand of the buyers in the marketplace. So what the Fed is going to do, anyone who knows economics, the Fed is going to raise the interest rates, which in turn would kind of slow down that pressure of wanting to buy.
Correct.
because considering prices going up to premium, interest rates are now going to begin to creep up. An individual, a working class person's income is not growing at the same pace as the appreciative value and the cost and the cost for money.
Yeah, I think I heard on the news this morning in May, I think it's supposed to go up like another 0.5 point or something.
That is correct.
Something like that. So in this market, as people who went through that whole moratorium phase, they didn't pay their mortgages. What is something that they should be preparing for if they find themselves in a situation where they owe 12 months worth of mortgage payments and, they don't have it? What should they look to do right now?
Well, since this title is the no-nos of short sale,
yes.
Just like in 2008, the general real estate investment community tends to find that as a prime opportunity to, if you will, take advantage of opportunities of the pain of other people.
Other people's pain.
Other
exactly.
people's pain. And again, I'm not here to step on toes
OPP.
in the investment community. I was once an investor, but there's a proper way to do it. But so what's going to end up happening is that there are going to be people who's going to be offered large sums of money to negotiate a short sale for an investor or for an investor to offer you so that they can get the contract on your home. And they're going to offer you money. So one of the first no-nos, and again, this is for my attorneys, we're not giving legal, financial, or tax advice. Always seek a competent advisor to just share with you our experience, and this is for entertainment and educational purposes. So basically what's going to happen is that anytime the bank is willing to take less on the debt owed, any money being paid toward that purchase or sale should be going to the bank or approved by the bank. So anytime anyone offers you money under the table on the side,
it's illegal.
You're creating bank fraud.
Correct.
You're committing bank fraud, and you be subjugated to stiff penalties of upwards of 3 years or more in prison.
That's number one.
For doing that. Number one. Don't generally, if the bank is aware that you have an offer, they do give relocation monies. Depending on your metropolitan city, that number could vary. I know in the metropolitan areas, it's upward to $6,000.
Well, that's good. That'll help you get a fresh start somewhere else.
Absolutely.
Yeah. So, so definitely don't take any money under the table. Any money you receive has to go to the bank.
That is correct.
That's rule number one in this whole process. So, if someone is in this situation, what would you say is the second thing? Let's say the bank has agreed to the short sale. Everything is going to move forward. Now, you move.
Well, you move. Well, no. The next no is make sure you either have a competent advisor or an attorney where in your short sale package, they're stating that there is no default judgment or deficiency judgment that will be issued behind you.
I was getting ready to ask you about that. That's when they move, they get something in the mail saying that they owe a deficiency judgment. How can they avoid, prevent that from happening? They owe the bank, so they sold it for $200,000, and now they get a deficiency judgment for $100,000. Let's say, what should they do in that instance? Well,
in the short sale negotiations, the purchase, that should be a clause in the agreement. You want to make sure that, so the no is don't sign off on that sale unless it has a waiver of a deficiency judgment.
Gotcha. Okay, so make sure there's a waiver so that you don't owe the bank and there's nothing being placed on your credit stating that you have this judgment or you have this collection after you.
Absolutely. And let's look at that for what it is. Someone comes to you, an investor, a new recent graduate from a guru real estate course, comes to you and negotiates to buy your house at 80 cents on a dollar. You owe the bank $1 million. They're going to say they want to pay it for $600,000. Right. There's a $400,000 deficiency there, right? So they're going to tell you whatever they need to tell you to get the deal. However, when that deal consummates now, the bank lawfully and legally has the right to come after you for the other $400,000. So you just allowed someone else to make a fortune on your house that you paid and struggle to pay, and they make six figures, if not 5 to 6 figures on the transaction, and then you still have to face your bank?
And you still...
How is that even righteous?
That is true. Yeah, so make sure you cover yourself. Now, if you're in a position where you're owing the bank and you haven't paid your mortgage because you haven't maybe been working or whatever, you may not be able to afford an attorney or an advisor. Is there something that could be done in that instance where they could...
Well, this is where you just got a nugget from us today on the show, is that make sure most people want to sell their property with a realtor. You should maybe speak to your listing agent and have them in negotiating the short sale. That's normally the process. The listing agent will either negotiate the short sale themselves, or they will outsource it to a third party to do the negotiating of the short sale. Just make sure that your listing agent is aware that you really want to see a waiver of a deficiency judgment before you sign off on the contract. Because ultimately, you have to sign the purchase and sales agreement in order for it to be consummated.
Yes.
So you can put in your sales, in your purchase and sales agreement, or your listing is subject to you getting a waiver of any and all deficiency judgment.
Okay. Now, there are some states that don't even do that.
That is correct.
Yeah. Yes. I know that there are some states that can't even go after you for that. So that's good. The other thing, I guess, if you do have a deficiency judgment, is you can file bankruptcy. You can exercise you can use that tool.
You can exercise that federal protection, that financial tool that's used by the wealthy. Absolutely.
Exactly. So that is another option. A lot of people, as we talked in the last episode, they get hung up on the fact that they don't want, this on their credit, but you've already not paid your mortgage for months. So, but with the moratorium, that was forgiven, right? So
that's correct.
That wouldn't be showing. But if you are unable to follow through on the agreement that you had with the lender, and now they start dumping all those late payments on you, you want to maybe look into doing the foreclosure. And if you do get a deficiency judgment, maybe because you've overlooked something, you can, like Al said, you can exercise your right and then use the tool of bankruptcy to get out of that.
Another no-no is that this has been common practice too. There's something called a arm's length transaction. Sometime a homeowner may have been approached by an investor or a friend or someone, and they say that they will buy the house from them for them. That is another area where you're in murky waters.
Buy the house from them for them. Okay.
You get it? From them for them. Or I'll buy the house back for you and it'll be yours.
You can live in it.
Yeah.
So you're in turn renting it from the person that's going to buy your house.
Right. That's a no-no. Most of the time, the short sale lenders want you to vacate the premises and start fresh.
That is true. Now, the other thing a lot of people don't realize also, if there is a deficiency judgment, that can also cause some tax consequences.
Oh yeah, forgiveness of debt. Ooh.
Right. So it looks like it comes to you as it can appear to be income. And I think you get a 1099-C or something like that.
Yep, that's right.
Okay. The lender forgives the amount of that deficiency, but that also to the IRS can look like it's income. So you have to be mindful of that as well. So you want to make sure that you protect yourself in that. In what ways is best for them to protect themselves in that instance?
That's correct. So another no-no again. This is all falling in line.
What is there a way for them to protect themselves if they do get a tax consequence?
Well, yes. The consequence is beautiful. If you're married, you have a $500,000 tax exemption.
Okay.
And if you're single, it's $250,000. So even if you get the deficiency judgment, once again, depending on your marital status, if the profit is under $250,000, you're fine. You won't have any tax consequences. If you're married, $500,000, the likeliness of you having a deficiency over $250,000 to $500,000 is slim to none in this marketplace today.
Okay. So I'm asking that so people, in case they get that or receive something like that, they don't panic, because everybody. Those 3 letters, IRS, no one wants to, they'll panic and wonder if they have any other options. So that is a good option for them right there. That's something that they should know.
Well, here's another no-no
Oh,
I've seen in my many years in the journey
okay.
is where if you've someone ever been soliciting you to do a loan modification
Loan
for
mod.
you when you're in a short sale situation, and they
Mm-hmm.
guarantee you that you'll get a loan modification. Be wary of that.
You can't guarantee. I used to do those, but you can't guarantee.
Or they ask you to sign over the title of the property,
Oh,
and all of that to negotiate your loan modification. Be careful, people. They're
Lord.
very crafty out there.
I've never heard of that one before. I didn't know people were doing that.
Oh, yeah,
Okay, sign.
it's like that credit. It's like a credit consolidation. Put the property in escrow, and we're gonna
I
work
got
for our
you.
fee. Instead of us taking money from you, you'll put the property in escrow, and that's kind of how we secure our payment in the event it doesn't go right.
Right. Okay. Oh, that's grimy. All right. So, so yes, that's a good no-no. All right. So we got 3 no-nos in this whole instance here.
Mm-hmm.
So definitely make sure you get a waiver for deficiency.
That's correct.
The other one was
file bankruptcy if you have a deficiency judgment.
Yeah, file BK. File bankruptcy if you need to, if you have a deficiency judgment.
Don't ever sign any paperwork for people saying they can guarantee negotiating a loan mod for you or guarantee your short sale. Be careful.
All right. Don't sign any guarantee paperwork. Okay. And if you can afford to speak with a lawyer, this is have that conversation with someone that can guide you through that process. But most realtors, if you find someone who specializes in short sales, they're usually well versed in that area. So you can definitely speak with a realtor who's been doing this for a long time.
Absolutely.
Just because we're going through a moratorium now, or we went through what we went through in 2008, doesn't mean short sales don't happen all the time, because they do. Most people think it just happens when things are falling apart. No. People's lives change drastically every day. This is something that has been going on for a long time. So there are definitely realtors out there that can help you. What other nuggets do you think we can?
Another one to be aware of. I mean, these are all the no-nos. Or also beware of scams. Let's see, what's another common one? Oh, here's another one. Beware of anyone that says that you don't need a real estate professional or title company when negotiating or selling your home in short sale. There are investors who want to do those kitchen table negotiations.
Yes,
where you end up signing off. You end up giving a quick claim deed to an investor, and then they own it, and then they're going to negotiate the short sale on your behalf. But technically, you've already conveyed the property.
Wow. Yeah, so that's definitely something you want to watch out for, investors.
And I'm sorry for you guys out there who this is your MO. I do apologize, but we bring the truth, the naked truth in this conversation.
Yes. We want to make sure that a lot of people have gone through this in the past, but we want to make sure that people are protected moving forward. So, we just wanted to bring some enlightenment on this, because we know that the way real estate operates, this is going to be something that's going to be coming up, and it's going to be an influx of short sales happening. So you want to be mindful if you're a homeowner, protect yourself, especially if you were one of those people in a moratorium, and you still don't have the money to pay. You want to protect yourself. But the good thing is, like Al stated, is that you'll be able to, if you are approved for the short sale, a lot of banks will still give you possibly up to $6,000 to now relocate and find something and start fresh.
That's correct.
So you don't have to feel like you're stuck. And remember, bankruptcy is not an embarrassment. It's a tool that rich people use every day.
Every day.
Every day, and start fresh.
Right. At the end of the day, why would anyone, for the sake of just ego or false pride, want to be enslaved to a debt that may put them in bondage for 20, 30 years to pay off? Yeah. Why would you do that if there's a remedy available to you?
Exactly. And the bounce back is a lot faster than 20 or 30 years. So you can definitely within a year or two, be right back where you need to be and moving forward and back towards your goals.
What do we call it? The setback for the bounce back.
Exactly.
Right.
Exactly. So that's all it is. That's all it is. So these have been some really good gems that been provided. We want to make sure that those who may be facing this or looking moving in the direction real soon, that they just cover themselves. That's all. And if you have any questions or need any additional advice, don't hesitate to send us messages on Instagram. You can DM us at Wake Up and Win Show. You can always go to wakeupandwinshow.com as well and contact us on there. And did you have any closing remarks that you wanted to make on this subject?
I'm going to always say that just like in church, there's an altar call at the end of the service for those who want to be delivered. I'm going to say the very same thing here on our show, is that if you really want to effectuate any of the conversations that we have been having on Wake Up and Win, contact us, enlist us. Let us help you get to where you would like to be.
Okay. I love it. I love it. So this is, again, short sale no-nos. In our next conversation, we will be speaking about industrialists. So that's going to be our next conversation. So definitely stay tuned, and thank you for taking the time to listen today.
Awesome. Thank you.
Thank you.
Thank you for listening to Wake Up and Win with Al Mills and Monique Macklin. We hope you've been enlightened by today's message. Please subscribe to our podcast and share with your friends on your social media platforms. If you have any questions or comments, follow us on Instagram at Wake Up and Win Show.